spreads in crude oil. Now, Errol, I know you got experience trading calendars and diagonals in options. You got experience trading futures calendars or what?
Never put on a futures calendar.
Can you kind of intuit what it's going to look like? For instance, today, the crude oil market. What do you think a calendar spread, like this is a game show, okay?
Yeah.
What do you think a calendar spread would look like in crude oil futures?
I think a calendar spread in futures would look like, I don't know, selling the near month, buying the further back month.
Wrong. You didn't phrase it in terms of a question. So you don't get paid anything. If anything, you actually maybe owe me some money. You're right, Errol. It is essentially taking a position in one futures contract and then taking an opposing position in a different futures contract on the same underlying market. We've got crude oil. It's above $100 for the first time since 2014. And I actually crunched some numbers for us. Do you want to guess in the last, since 2010 until now, what is the highest price we've seen for crude oil?
150, 160.
Wow. You're way off. It's 100. It's 114, dude.
Don't do me like that, Frank.
What the hell?
Don't do me like that. I guessed. Don't do me like that, Frank. All right, 114. What's next?
I'm sorry. I shouldn't be laughing. But that just like reminded me so much of you ever watched 30 Rock before?
I haven't.
Okay, well, there's like the scene where they're talking to in the show. Alec Baldwin is like, he's in charge of everything. He's like very rich and powerful. Mm-hmm. And there's like like he's kind of like Tom Sosnoff. Like he's a little detached from the way that everyday people live. And there's like a scene where like one of them is like, oh, like we need to buy this, like we need to get this. And he's like, how much could it cost? Like, how much is like a carton of milk? Like $300? I don't. And he just like has no clue. And I love Errol, like the young like dude that's on TikTok. He's doing cool stuff. Like he's gonna buy an electric car and everything else. It's like, I don't know how much crude oil is. Like $300? I don't know.
Exactly. So you mean to tell me we're getting near that all-time high again?
So since 2010, highest price is about 114 and change. We're right up at 110. Of course, this market can go anywhere because guess what? It went negative not a couple of years ago. And so theoretically, it can go anywhere. But guess what? After it went negative, it went super positive. And after it's gone positive in the past, when it's gone up to 100 or 110 or 114, it's come back down. I'm not guaranteeing anything. I'm just laying out the stats. The market does not spend a lot of time above 100 or 110. And since 2010, it's been the last time it was above 100, 2014. So 8 years ago now. And don't get me on that. Okay. I didn't say anything about where it's going, but I definitely am on the short side of things, given my contrarian nature and everything else. And so if you wanted to, though, Errol, like we create these small crude oil futures, right? Which is just 100 barrels compared to the big contract, CL, which is 1,000 barrels. But even amid some action like we're seeing here, some really unforeseen volatility, this contract gets a little big even at that diminished size. So we want to look at some calendar spreads, and here you have it. We're looking at just March and April, 2 consecutive months, very short duration, and we're going to take one position in one of them and another position in the other, and that's what births a calendar spread.
This is a perfect segment, actually, because it's not that I just put on the position on USO. I checked how much the buying power effect was on Forge/SMO, and that kind of deterred me right away, and that's why I accepted those other opportunities. So perfect segment to get into.
No, I think that's totally cool, which is like, and you did exactly what you should do as a futures trader, where it's like, am I going to feel comfortable in this trade? Well, let me check the margin. Is that margin number a little scary? All right, I'm out. And you'll see for the calendar spread, it's way less. I mean, this is a market that high to low in the same time frame of let's call it the last 3 or 4 weeks. Let's just call it the last full month. SMO high to low has moved well over $1,000. This spread that we're looking at in that same time frame, Errol, has moved $300-400. And so, you're getting that size down more. It'll show it also in the margin. Now, how do we choose which side that we're looking at? Well, when crude oil rallies to the highs, Errol, these calendar spreads, the front month will be trading higher than the deferred month. It's similar to volatility, right? When stocks fall and volatility pops up, you see short-term vol go really up, medium-term vol go kind of up, and long-term vol in some cases not really rise at all. And so you're seeing March crude oil priced higher than April.
Do we have a name for that? I know we'll use backwardation with volatility and contango. Do we have any names for this in the futures price?
I mean, yeah, there's the backwardation and contango. Those are the names for the curves being, downward sloping and upward sloping. I mean, the names themselves are less intriguing than just like the actual action. Like knowing that when commodities rally to new highs, you're going to tend to see short-term prices higher than long-term prices. And when those commodities sink down to their lows, Errol, you'll tend to see short-term prices lower than long-term prices. And knowing how to jump on top of some opportunity like that, I think is more important than necessarily you don't need to read a textbook 100%. Or anything like that to trade calendar spreads. But if you want to know the terms, they're there for you, and they're pretty cool to throw around at cocktail parties and everything else. But you can see here the correlation between this calendar spread and crude oil itself. Like it looks almost like a mirror image, right? If I bounce back and forth, looks the same,
identical, right? Yeah.
And so what we would be looking to do here, if you wanted to get short this crude oil, but you didn't like the price tag at $1,600 on an outright contract, and you wanted to get a little bit smaller, look at this y-axis arrow here. This is the notional move, the dollar move here, and it's gone from trading about $50 worth of difference at the lows in December, January to $350. So big appreciation, but a high to low move of a couple $100, a lot smaller than that outright contract. In the same time, that outright contract has moved multiple thousands of dollars. And so if you're looking to get short, I would sell the SMO H22, buy the SMO J22. If you wanted to get long crude oil for whatever reason, you could buy the March crude oil, the SMO H22, and sell the J22. And that's your calendar spread on crude oil.
No, I like it because, I mean, again, I got short on oil a little soon. So if I would have put on that large contract, maybe I would have been a little more uncomfortable sitting in something like that. So